Hello, I'm David Cassidy with the weekly market summary for the week ending Friday, the 16th of July. Global equity markets ended the week slightly lower thanks to renewed concerns that increasing coronavirus infections will weaken the economic recovery, especially given that Friday's University of Michigan's Consumer Sentiment Index unexpectedly declined to 80.8 in July from 85.5 in June and economist expectations of 86. However, we believe that a US economy growing at a slightly more moderate pace will help ensure that the Fed keeps US interest rates low, and thankfully the Fed Chair, Jay Powell, stated that it is too early to start scaling back the US central bank's monetary support, despite Tuesday's higher CPI inflation reading, as the US employment market needs to see, quote, substantial further progress. Looking ahead to this coming week, the focus will mainly be on Europe and Thursday's ECB monetary policy meeting. The ECB's sole mandate is to maintain stable inflation, and it was recently amended from its vague below but close to 2% to a symmetric target, allowing short-term periods of above 2% CPI inflation to be looked through. Now, while similar to the recent changes seen at the Fed, the ECB has stated that it is not following the Fed in letting inflation run hot to make up for past below target inflation. Although this change is positive, it doesn't mean very much, as we are unlikely to see all of a sudden inflation running above 2%. In fact, since the global financial crisis back in 2008-2009, Eurozone CPI has averaged just 1.3%, while core CPI, which excludes volatile items such as food and energy, has averaged just 1.1%. As an aside, the oil price fell sharply over the week on the potential for slower economic growth, coupled with speculation that Saudi Arabia and the UAE had reached an agreement that will see OPEC increase supply, and a lower oil price will help to relieve some of the recent inflationary pressures. However, in our opinion, what this ECB change actually does is effectively tells the financial markets that the removal of the Eurozone's ultra-loose monetary policy is a distant prospect, which is positive for equity markets. This week's other data releases include UK retail sales, US, UK, Eurozone and Japanese PMI, and US housing data.